clear the trade war with the United States is having a real impact on the Chinese economy. New manufacturing numbers, PMI slid to an 8-month low and was blamed by the potential impact of the trade war. Central bank is already intervening, trying to boost liquidity and encourage more lending. And the fears have reached the top of the Chinese government. Xi Jinping met with 25 of the most senior leaders and admitted the trade war poses a threat. Paul Donovan is with me in London, the chief economist at UBS Global Wealth Management. Good to see you, Paul, as always. How concerned are you now that these trade wars with the EU, even though autos is off for the time being, now more with China, they are going to start having some real economic impact?
Well, let's get the terms right first. We don't have a trade war. That's clear. A trade war takes place when trade in real terms is falling as a share of the world economy. That's not happening. Global trade is stable, possibly even rising a little bit as a share of the world economy. The US consumer is being taxed on goods partially made in China, yes, absolutely, but we're not in a full-scale trade war. So what we're seeing here is worries about the future, worries about what happens if things get worse, rather than things actually getting worse right now. The Chinese are providing a bit of a boost to domestic demand. That was always going to be on the cards, though.
Paul, I applaud your sophistry, some might arguably say pedantry, on the question of whether we are in a trade war or not. But you know what I mean, sir. You know how, in the journalese for which I take refuge, at the end of the day, if the Trump administration whacks 25% tariffs on this $200 billion, it will have an effect or not?
It'll have an effect, absolutely. It will cause the US economy to slow, probably. I mean, we've got to call a spade a spade. This is a 25% sales tax on the US consumer. That's what we're talking about here. It will partially affect China. Remember, most of these goods aren't made in China. They're made in China a bit. Some of these goods are actually made in the United States and shipped via China, which is going to cause additional problems. So the impact on the US consumer is larger than the impact on China directly. It is worth bearing in mind there will be a lag. So this is relevant with the midterm elections. Look at what happened with washing machines. You get the tariff slapped on in January. It's not until May, June that you actually see the prices changing. It takes time for this to filter through. So if we get the tariffs now, the consumer may not realise that Mr. Trump is hiking up taxes ahead of the midterms. Let's
turn to bonds at the moment. The US Treasury hit 3% and then fell back. But it comes at a time when Japan has effectively capped the rate on the 10, although the market is pushing that new higher rate. And we have, the question of tightening by the Fed, the ECB not deciding what it's going to do, and the Bank of England would like to, but probably can't.
Well, I think the Bank of England probably will.
Right.
The market certainly thinks that they will. Well, because they should, frankly. I think the Canadian has worked out that you've got wages growing at a perfectly respectable pace. You've got credit growing at a rate which isn't alarming yet, but which is edging in the direction of alarming. And the UK economy is jogging along with not a great deal of spare capacity. So probably it's prudent to move towards a slightly less negative real interest rate. And I say this through gritted teeth as a mortgage payer who will see his mortgage costs going up if Carney does raise rates tomorrow. If we look at the ECB has been pretty clear. They're not going to do anything until December, then they're going to scale back. What we're seeing here is a gradual normalisation, because you know what? The world is sort of normal as it's going to get.
And as you look at that normality, there is always the opportunity for maverick moments, for example, Elon Musk, for example, Apple results, all these extraneous market movements which have their effects as well. What are you concerned about?
So what we're seeing, absolutely, I think, is risk has ticked up. The underlying economic fundamentals are fine. If economists were allowed to run everything, it would be absolutely perfect. But unfortunately, as you know, Richard, that's not the case. And what we have, therefore, is quite a lot of noise. Every time there is a presidential tweet, you guys comment on it, and that adds risk and uncertainty. If you commented every time I did a tweet, there'd be a lot less risk and uncertainty, and the world would be a better place.
I shall start doing that. Well, maybe not every tweet from Paul. Good to see you, sir. Thank you, as always.
Good to see you, Richard.
Paul Donovan, who we always love having on Questman's Business.